Hackers linked to North Korea are now going after Web3 and crypto communities, using fake Zoom installers, bogus job postings, and malware-laced downloads. Even if you're on a Mac, you're not out of danger. Be careful, don't just tap on links without thinking. You've probably come across those sketchy Coinbase messages or shady texts filled with links. Avoid them completely, and if a random number texts you and asks you to call, ignore it. That's exactly how these scams get started. I keep a big portion of my XRP with iTrust one of my partners, because of the way their closed-loop system is set up. Basically, you can deposit XRP or fiat into your iTrust account, but only cash can be withdrawn. This setup is intentional. It makes iTrust a much less attractive target for hackers. Even if someone managed to gain access to your account, they wouldn't be able to move any crypto out, which is typically the main goal in most attacks. If you want to learn more or connect with them, just head over to itrustcapital.com XRP Army. They're also offering a $100 funding bonus when you use the promo code XRP6. Definitely worth checking out. XRP is holding steady right now, currently sitting at 2029. The overall market cap is around $336 trillion, and honestly, everything feels like it's on the verge of a major move. Brad Garlinghouse just made a big announcement. He's been invited to testify before the Senate Banking Committee this Wednesday to speak on the urgent need for clear crypto market structure laws. Huge thanks to Chairman Tim Scott, Congressman Barry Loudermilk, and Senator Ruben Gallego. Hope I got that right, for their continued leadership. They've been strong advocates for the digital asset space, and their efforts have helped push the conversation forward. Getting solid crypto legislation in place is absolutely essential. It's the key to unlocking innovation, expanding financial access, and protecting everyday investors here in the US. And now we've got some major momentum building, especially with the Genius Act making its way through Congress. It's expected to pass in the House soon and could be on President Trump's desk any day now. Cody Carbone from the Digital Chamber, the CEO himself, just dropped an important update straight from DC. The US Senate has officially passed the Genius Act, which would establish the first ever regulatory framework for US dollar-backed stablecoins. That's a big deal. But we're not done yet. Now it's up to the House. Cody's calling on all of us to speak up and help push this bill across the finish line. Stablecoins backed by the US dollar are vital to keeping the dollar strong globally, and they make payments faster, cheaper, and more reliable. So if you support the future of digital finance in the US, hit that link, contact your representative, and tell them to pass this bill now. We can't afford to fall behind while other countries move forward in the stablecoin race. Thanks for standing with us, and if you ever need to connect with the Digital Chamber, you know where to find them. All right, check this out. Eric Van Miltenberg, Ripple's SVP of Strategic Initiatives, recently shared some eye-opening insights on Ripple's expanding vision beyond payments. Now, when you think about Ripple moving into crypto prime brokerage, that's a massive pivot. We're talking about a shift from traditional payment rails and more retail banking style to something that resembles investment banking. That's a huge leap. Eric acknowledged this and explained that while he can't reveal every move just yet, the direction Ripple's taking is very intentional and heavily informed by customer demand. A great example, their acquisition of Hidden Road, a prime brokerage firm with clients ranging from major hedge funds to private equity players. Here's where it gets interesting. Hidden Road's clients need collateral alternatives, and Ripple's RLUSD stablecoin is being positioned as that exact solution. Instead of holding fiat or third-party stablecoins, institutions can now look to RLUSD for massive transactions, especially with Ripple backing the balance sheet. Plus, Hidden Road's hundreds of clients are already dabbling in digital assets, so it opens the door for Ripple to upsell custody, liquidity, and other services. A perfect example of cross-pollination in action. When asked if Ripple might eventually go after retail-focused brokerages or exchanges, Eric made it clear, Ripple has always been a B2B, enterprise-first company. While they've thought about centralized exchanges and direct retail plays, they're sticking to what they do best, building tools and infrastructure for financial institutions. Any benefits to retail users happen indirectly through Ripple's institutional partners. And get this, Ripple's original mission hasn't changed in almost a decade. From the beginning, they've aimed to create an internet of value where money can move around the world as easily as information does online. They chose cross-border payments as their starting point, and it's paid off. Ripple now has a global network serving hundreds of customers, moving over $70 billion in transactions, and covering 90% of FX markets. But customers started asking for more. Better liquidity, easier on-ramps and off-ramps, custody solutions, so Ripple responded. They acquired Medico, a Swiss custody firm, and launched Ripple USD in response to stablecoin demand within payment flows. Now with hidden road, Ripple is bridging the gap between TradFi and DeFi. They're building a complete enterprise-grade ecosystem through both organic development and strategic acquisitions, so banks and financial institutions can trust Ripple as their one-stop blockchain partner. They're fully licensed too, with more than 60 regulatory approvals worldwide, from US money transmitter licenses to Singapore's major payments institution certification. Ripple is making it clear they're not just serious, they're setting the bar for compliance and institutional trust in the blockchain space. And just as that's happening, BBVA Bank goes live with crypto. Things are moving fast. Check this out. Guarantee BBVA, the Turkish branch of the global banking giant, is now rolling out access to a wide lineup of digital assets. We're talking Solana, XRP, AVAX, and more. It's pretty clear where this is heading. Major banks are leaning in. Crypto adoption is going mainstream and it's happening fast. Not sure if you've seen this clip. It's from the Crypto.com CEO, and it's a big one. Though, he shared his outlook for the next couple of years, saying that altcoins with strong liquidity and capital flow are going to lead the pack. And get this, there's a forecast projecting that an XRP ETF could pull in $8 billion in inflows next year. Imagine the kind of price movement that could trigger. As for crypto, itself, he said they've got a bold, clear strategy that sets them apart, something no one else in the space is really doing, and honestly, no one else can compete with. They're building it, and he's inviting people to be part of that journey. And what he said lines up with what I've been talking about. When this market really heats up, most of the big capital is going to flow into the crypto blue chips. XRP, ETH, BTC, that's where the heavyweights are looking. XRP sits right at the top of the list, a true blue chip asset in the American crypto space, and in my view, the top contender. Now here's what I think is going to happen. A lot of major shifts could unfold at the same time, but there's a key risk. What if Bitcoin's price stalls or starts dropping? People love to point out how some Bitcoin Treasury companies have crushed it over the past 5 years. And yes, that's true. But if you look at their performance year to date, especially compared to Bitcoin miners, you'll notice they're starting to hit resistance. In theory, companies with Bitcoin-heavy treasuries should be seeing their stock prices rise at a multiple of BTC's daily movements due to built-in leverage. But that correlation is breaking down. What we may be witnessing is the peak of the Bitcoin Treasury narrative. Many of these companies don't operate any other profitable business. They simply acquire struggling firms, pivot them into Bitcoin accumulation vehicles, and hope for price appreciation. But here's the catch. As more players enter the space, capital starts flowing to where the returns are best, meaning lower price to NAV multiples. And just like we saw with the Grayscale Bitcoin Trust, these assets can start trading below NAV, especially when there's oversaturation or growing debt loads. So if Bitcoin stagnates or drops significantly, some of these companies could find it hard to sustain their market valuations. Anyway, let's move on. If you want to get deeper into the community discussion, jump into the group over at dasrp.com or hit the Patreon link below any of my videos. You can also subscribe on X for exclusive content, and as always, this isn't financial advice. It's just my take for entertainment purposes. Don't forget to subscribe, hit the like button, and let's keep it rolling.